Hello, welcome back to our revision for Business Data Analytics, the practical paper, pilot paper, December 2022. And last time, we were solving question number 21, the one on Amani Pharmaceuticals. And when we last met, we copied down the data into Excel. So access your Excel file. And I would like to inform you that I will provide the Excel file after we've worked it out so that you can be able to compare and also make corrections where need be. So we copied down the data in Excel, and this is it here. So the first step, we are going to look at the worst case scenario. So underneath here, we type worst case scenario. And then we copy down this data. So we highlight it, type Control C, then come down here and then hit Control V to paste the data. So we are supposed to focus for the next 3 years, and the next year is 2023, 2024, 2025. So to forecast, we use the growth rates provided, and this, for the worst case scenario, we use this case scenario. We use these growth rates. So what do? So we come to the cell C28, click on cell C28, and then you type the equal sign because you want to insert a function, equal sign, the base year, click on the base year, multiply by 1 plus the growth rate for the worst case scenario. And don't forget to make it an absolute reference by hitting F4. You are going to see the dollar signs which indicate that it is an absolute reference. It is important to use an absolute reference so that when we drag the formula, we copy down the formula as it is instead of it being copied to the next cell. So we want to maintain it as 2% for the worst case scenario. Close the brackets, hit enter. Drag to find for the other years to 2025. When you drag it, it automatically calculates it for you. So when you click on the cell containing 2024 data up here on the formula bar, you can see the formula. And if you double click it, you can see the information used. So we used 2023 data and the worst case scenario for 2020 for the worst case growth. So moving on to the cost of goods sold, we do the same, equal sign multiplied by 1 plus the growth rate for the cost of goods sold, and then you hit F4 to make it an absolute reference. Then close the brackets, then hit tab or enter, then drag it like that. So by dragging it, let me delete first. To drag it, you click on the particular cell you want to copy the formula for, come to the bottom right corner until it shows you a plus sign, and then drag it. Right? If you're not familiar with the basics of Excel, we have a course on Introduction to Excel and Intermediate Excel. Remember that this paper assumes that you are in the advanced level of CPA, so we are going to handle it as an advanced level. If you feel you're not in the advanced level of Excel, you can access our Excel course. We have an Introduction to Excel course as well as intermediate. I will post the link for this course at the end of the video. So to calculate the gross profit, we type the gross profit is revenue plus cost of goods sold. So for this year 2023, we type in the equal sign, click on the revenue cell plus the cost of goods sold, hit tab, right? So we have the value for 2023. Come again and drag this formula, right? You can format it. We can format this to have the line underneath the bottom border. We click on the borders and we click bottom border for it to be formatted well enough. So other investments, now we do the same, equal sign, the base period multiplied by 1 plus, and then we make it into absolute reference, and then we drag again, we get the data, and then we insert the bottom border. You click on the bottom border and we have that. Total income should be gross profit plus other incomes. Hit tab, drag that data. Then we have administration expenses. So again, multiply by 1 plus the corresponding growth rate. And then drag it as such. Distribution expenses, the same. Drag it. We've made a mistake here. Remove the data. So we click on this multiplied by 1 plus the growth rate for distribution expenses. Then F4 to make it absolute. Close the brackets. Hit tab and then drag. Then to find the earnings before interest and tax, we are supposed to find the sum. So we click equal sign, sum, open brackets, highlight the 3 data. Remember, total income plus administration expenses plus distribution expenses. Close the brackets, hit tab, and then drag it as such. And then you can highlight this so that we can insert a bottom border for formatting purposes. Then depreciation and amortization, we do the same, equals 150 multiplied by 1 plus 5, hit F4, close brackets, drag it out, then insert the bottom border, clicking up there. Then earnings before interest and tax, we are supposed to add equal sign. It's earnings before interest and depreciation plus. We use plus again because we have represented them in negative. So positive plus negative, positive times negative is still negative. So we say plus that, click on it, and then close the brackets, hit tab. Sorry, accept the correction, hit tab, and then drag it. Interest expense, the same. Then drag it. Insert bottom border. In fact, try and fill it out. Try and fill the rest of this alone, and then we can compare notes. Just try, and then I will provide the Excel document at the end, and you'll be able to compare. Yeah, pause the video and fill it up. So once you have worked them out, you should have something that looks like this. So we have earnings before tax. We calculated it by adding the earnings before interest, then we subtract the interest expense, and we got this for the 3 years. And then you have the income tax expense. Remember, we are told that the tax rate is 30%. So that one we calculate based on this rate. Remember, we say the tax rate multiplied by the profit before tax. So we insert this tax rate at 30%, and then to calculate the income tax, we say the earnings before tax multiplied by the tax rate, and we have used an absolute reference because it stays the same for the following 3 years. And then we calculated that and we dragged it, and this is what we got. Profit after tax, we subtract the tax, we get this. And then dividends paid, we used the growth rate provided. We had a growth rate of 10% for the worst case scenario. That's what we used. Retained profit for the year, we say profit after tax, we subtract the dividends for the year, and we get the retained profit for the years, the following 3 years. Now to get the profit, the retained profit brought forward, it is the retained profit carried forward from the previous year. So we write an equal sign and we refer or we reference the previous year retained profit carried forward, which is cell B45, right? Then to calculate the retained profit carried forward, simply we say the retained profit for the year plus the retained profit brought forward, and we get that, the total equity. So we are told that the growth rate in equity is only attributable to changes in retained profits. So when it grows, it means that the equity grows at the rate of retained earnings for the period. So to find the total equity at the end of 2023, we say we reference the previous period's total equity, so equals B46 plus the retained profit for the year, which is this at C43. We hit enter. Now for total assets, we assume that it grows at the same rate as total equity. Remember, total assets is calculated by saying equity plus liabilities. So with the assumption that liabilities are not changing, then it implies that any change in total assets is caused by a change in total equity. So what do? We reference the previous period's total assets, which is B47, plus the retained profit for the year. Hit enter, right? Now, to find the retained earnings for the next years, we drag the formula, right? You'll notice that for 2022 is 0 because you have not yet calculated the closing, the retained profit carried forward for 2024. So we come down here and retained profit, we drag the formula, right? And then to find, when you drag the formula, you'll notice that the retained profit, the retained profit brought forward for 2025 has been updated. Then we drag the formula for total equity. Again, we drag the formula for total assets. We can format this by hitting the bottom border so that they can look uniform. Again, bottom border. Here we can highlight and click at top and double bottom border. So we have this. See whether your figures correspond with this. Yeah, so for the worst case scenario, we have done our bit. We have forecasted for the next 3 years. Now we move forward to the base case scenario, this case scenario. So we type there base case scenario, and as you can already predict, we are going to use, sorry, I've misspelled the word case. We are going to use the exact same formula, exactly what we did for the worst case scenario, but now using the growth rates provided for base case scenario. So how do we start? We begin by copying down. We copy down the base year. So we hit Control C, come here down, hit Control V, and then we type in 2023, 2024, 2025. And then for revenue, so we come here and we type in equals the previous year multiplied by open brackets, come here where we have the base case scenario. Sorry, first of all, open brackets, then type in open brackets, type in 1 plus this base year, and then hit F4 for it to become an absolute reference. Close the brackets, hit tab, then drag. Do the same for cost of goods sold equals previous period multiplied by 1 plus, come here again for base period, make it an absolute reference by hitting F4, close the brackets, hit tab, drag it out, then come here, hit bottom border for the sake of uniformity. Sorry, I think we used the wrong border. Click there, then click no border, then highlight, click bottom border. To get the gross profit, again we say equals revenue plus the cost of goods sold, hit tab, and then drag it out. Come here for other incomes, click, hit equals previous period multiplied by open bracket 1 plus, you go to the growth rate for base case scenario for other incomes, which is 3%. Hit F4, close brackets, hit tab, then drag it, hit bottom border. Now to find the total income, we say equals the gross profit plus other income, hit tab, and then we drag it. Now you can see the form, the steps are basically the same. So I would challenge you to try and fill out this data here using the same formula as we used for the worst case scenario. But remember, use the base case scenario to calculate your base case forecast. And remember to use absolute referencing where necessary. And also the tax rate is 30%. So pause the video and then once you solve it, play it and see whether we have gotten the same figures. So welcome back. So here is our complete base case scenario. Compare notes, compare whether you have the same figures. For total assets for 2023, we have 4641.72. We have that 4764.5 for 2024, 4864.84 for 2025. So at this juncture, I would like to challenge you to do the best case scenario all by yourself. And then as usual, pause the video and then we shall come back and see whether we have the same figures. So what do? You do the exact same steps, but now using these rates for best case scenario. So copy down. So as the first step suggests, you copy down this first, copy down this, the base year, which is 2022, come down here, paste it, Control V, then here you can type in best case scenario, right? Come here, type in 2023, 2024, 2025. So for revenue, we say equals the previous period multiplied by 1 plus, come up here, base case scenario, hit F4 for absolute referencing, close the brackets, hit tab, and then drag it out. Come down again for cost of goods, highlight the cost of goods at B79, multiply by 1 plus the rate of change for cost of goods for base case scenario, hit F4, close brackets, hit tab, and then drag it out to 2025. Format it by hitting the bottom border so that it looks like that. Gross profit is revenue minus cost of goods. Here we are saying plus because it's already in negative. Hit tab, drag it, right? Now pause the video and do the rest. Follow the exact same steps we did for the other years, but now use the base case scenario. Use these rates, and tax rate still remains at 30%. Proceed, pause the video. Welcome back. Let's compare notes. Check whether your figures are same as these figures. So for total assets for 2023, we have 4679. 2024, we have 4885. For 2025, we have 5117.95. Remember, if you have any question, just type it in the comments and you will be answered as promptly as possible. Going back to the question, now we move to part B. We are required to calculate the metrics for evaluating performance under each scenario: net profit margin, return on assets, and return on equity. So we move back to our Excel file and we scroll. So we can type down, maybe here under the worst case scenario, maybe we can add a few, let's add a few rows by clicking. You highlight the particular row, in our case 48, then you click, hit Control Shift, then the plus sign, right? Control Shift plus sign, and another one, that will be enough. So here we type in, so we are supposed to get the profit margin, net profit margin. So first of all, what is the formula for net profit margin? The formula for net profit margin is net profit divided by revenue for the particular year, right? So once we have that formula in check, let us move this down here for separations purposes. We can easily calculate it for each year under each scenario. So what do? We click equals, then net profit for this period is, let us see, the net profit, that is income of profit after tax. So we click, highlight that, which is cell B41 for our data. Divide by the revenue for the period. Then you hit tab or enter, and we have 0.1 for 2022, and then we drag it out until we get to 2025 here. So when we highlight, we can see that this is calculated as 4.17.34 divided by 4,775.44, which is the net, which is the profit after tax divided by the revenue. Now we can format this into percentage. So we highlight them and then we hit this percentage style. Then we add decimal points, 2 decimal points for accuracy, right? So we have the net profit margin for 2020 for the worst case scenario. Next, we are supposed to get the return on assets. Return on assets. Again, we can write the formula, which is net profit divided by total assets. So in our case, net profit 4.465, which is cell B41, divided by total assets, which is cell B47. Hit tab, then drag, right? We can format this the same We can format this the same using the same format. We highlight that, then we click Format Painter, and then we highlight it again, like we highlight the cell B50 to E50. Then we let go, and it's going to calculate the same. It's going to format it the same, which is percent style with 2 decimal places. The next one, we are supposed to find the return on equity. So write return on equity. Again, the formula, we type it down, which is net profit divided by total equity. So we say equals the profit for the period over total equity, close bracket, no, there are no brackets, then hit tab and then drag. We can format it as percent style. Click here to add decimal points. We want 2 decimal points for our data for uniformity. And then now we have the net profit, the return on assets, the return on equity for every year under the worst case scenario. Now, you can calculate the metrics for the following, for the rest of the scenarios, both the base case scenarios and the worst case scenarios. You can pause the video and do it so that we can come back and see whether we have the same figures. So welcome back. To do this, we copy down. Can take this data here and copy it underneath. You can type it underneath there. Come here underneath the base case scenario. Skip a cell just like we skipped here, and then you hit Control V, copies down. Now, if you have already worked out, I am sure you use the same formula. You said equals the profit after tax for the period divided by revenue. This is for net profit margin, and then you hit tab and you dragged it out, right? And then you came here and converted it into percentage, 2 decimal points for your data, right? And if you did that, you are correct. But I want us to pursue a simpler method. Excel allows us to copy formulas as they are, and it adapts them to the particular position we have in the Excel. So if we, let's say we highlight all this, we click Control C, and then we come back here. Let's first of all delete this data. So come back again, highlight the data, hit Control C, come here right beside the net profit margin, hit Control V. Now Excel automatically calculates. So for instance, if we hit on this particular cell C78, we double click it, we shall see that the return on assets has been calculated as cell C69, which is the profit after tax for the period, divided by cell C75, which is the total assets for the period, which is the return on assets. Again, if we can confirm, we look at the return on equity. Return on equity, we see that it has been calculated using the same formula as we intended it to be. So moving on to the best case scenario, we can highlight it as it is, hit Control C, come down here, one cell underneath the data, then hit Control V, and voila, Excel populates our data set with the required calculations. Now compare the figures and see whether they tally. And at the end of the class, you'll be able to access this Excel file so that you can use it for your own revision. So moving on, we are supposed now to present a summarized dashboard with suitable graphs to highlight the revenues and the net profits under each scenario. So we come here, we can begin with the first scenario, the worst case scenario, and we highlight the revenue. We're supposed to prepare graphs for revenue and profit. So for the worst case scenario, highlight the revenue, come here, hit insert. Here, click here the 2D line, then hit the first one, and it will automatically generate it for you. We have the revenue. We can type here revenue in brackets worst case scenario. Right now we have the revenue. We want to get the profits, the profit after tax for the period. Highlight it again, hit insert, same graph. You can see for the worst case scenario, it's going down. We can change the title of this to be worst case scenario. Come down here for the base case scenario. Again, highlight, insert, revenue. You can see for revenue it's a straight line because we have assumed a constant growth rate and hence the constant slope. It's an upward sloping line. So again, we come here at the profit for the period. Now before we proceed, we can adjust this to be revenue. Here it is base case scenario. Then once again, highlight the profit for the period. Insert. That's the best case scenario. Let's do the same for the best case scenario, and then pause the video and generate for best case scenario and see whether you've understood, and then play the video to see whether you'll develop the same graph. So we have these two graphs for the best case scenario, and one correction I want us to make is that we are required to develop the graphs for the 3 years, the 3 scenarios. But remember, in our data or in our graphs, we have included 2022. So how do we adjust this? It is simple. Click on the data on the graph, right click the graph, and then hit here, select data. Once you select data, we are going to remove, untick the first one, untick it, right? Once you untick it or you unmark it, it becomes it is not included in the graph, right? Then we can, let's go back, hit edit so that we can have the axis label range. So the range is from 2023 to 2024. Highlight it and then click OK. Then click OK. Click OK. So correction, once again, right click the data, hit select data, then hit edit axis label range, highlight the whole area from this first column to the last one, hit OK, and then now unmark the first one. It was marked, but unmark it, then hit OK. For profit after tax for the worst case scenario, again right click, select data, then click edit that period, hit OK, and then unmark the first one so that no, it is not included in our graph. Hit OK, right? Do the same for the rest. select data, then edit, hit OK, and then unmark the first. OK, hit select data, edit. OK, unmark the first one, hit OK. Select data, edit, highlight this, the first column, hit OK, and mark the first one, hit OK. Profit after tax for best case scenario, select data, edit, highlight, click OK, and mark, hit OK. Now we have these graphs. We are supposed to present them in a dashboard. So we create another sheet by hitting here the plus sign here at the bottom, click it, it becomes a new sheet. So what we do, we copy down these graphs, highlight them, hit an easy way to do it. Sorry, an easy way to do it. We select the cell, we hit Control X, then we come to our dashboard, we hit V, come back, find the profit after tax, hit Control X, come back, right beside it, hit Control V, come back to there, hit Control X again. Control X is cut and paste. We want to cut them and paste them, hit Control V, come back, hit Control X, hit Control V. So we have the best case, the best case. We did not copy the worst case, so let's copy it down, hit it, Control X, then Control V down here. Again, Control X, Control V, right? So here we have our dashboard. We can align them. We can align them so that they look better. So this is our dashboard. We can rename this folder or this sheet as dashboard. How we rename it? You click on it, you click on the sheet, hit rename, hit enter. We can bring it we can reposition it by dragging it to the first part, such that it is the first sheet that you see once you open the document. So it appears we have been able to solve the entire question. It was for 20 marks. So we have done it in 40 minutes. But when you're working it out, of course, we have spent a lot of time because I was explaining. You can try and work it out for a shorter period of time, right? Remember, this document is available at the end of the video. You can download it and you can view it to see whether you've been able to, for revision purposes, right? For you to see whether you made any mistake, and also for you to see the cell referencing and so on. Again, thank you for joining me for this revision. Hope to see you for future revisions. Remember, our full course is available at our website, startupcollege.ac.ke. I will provide the link underneath, and also follow us on all social media platforms. Goodbye.